Module 3. Evaluating blue-chip stocks. Evaluating the valuation of blue-chip stocks involves analyzing fundamental metrics that provide insights into the stock's pricing relative to the company's earnings, sales, and dividend payments. Here's how you can use key valuation metrics to assess blue-chip stocks. Price-to-earnings, P/E, ratio. The P/E ratio compares the stock's market price to its earnings per share, EPS, and helps assess the stock's relative valuation. Here's how to evaluate it. Compare to historical P/E. Compare the current P/E ratio to the stock's historical P/E ratio. If the current ratio is lower than the historical average, it could indicate that the stock is undervalued. Peer comparison. Compare the P/E ratio of the blue-chip stock to its industry peers. If the stock has a lower P/E ratio compared to its peers, it may suggest that it is relatively undervalued. Growth prospects. Consider the company's expected earnings growth rate. If a company has strong growth prospects, a higher P/E ratio may be justified. Price-to-sales, P/S, ratio. The P/S ratio compares the stock's market price to its annual revenue per share and assesses the stock's valuation based on sales. Here's how to evaluate it. Industry comparison. Compare the P/S ratio of the blue-chip stock to other companies in the same industry. If the stock has a lower P/S ratio compared to industry peers, it may suggest relative undervaluation. Historical analysis. Compare the current P/S ratio to the company's historical ratio. If the current ratio is lower than the historical average, it may indicate undervaluation. Dividend yield. Dividend yield compares the annual dividend per share to the stock's market price. It provides insights into the income generated from owning the stock. Here's how to evaluate it. Compare to historical dividend yield. Assess the current dividend yield compared to the company's historical dividend yield. A higher current yield may suggest the stock is undervalued or that the company has increased its dividend payments. Industry comparison. Compare the dividend yield to other companies in the same industry. If the stock has a higher yield compared to industry peers, it may indicate relative undervaluation. It's important to note that valuation metrics should not be used in isolation but in conjunction with other factors. Consider the company's growth prospects, industry dynamics, competitive position, and overall market conditions when evaluating the valuation of blue-chip stocks. Additionally, keep in mind that different industries and sectors may have different valuation norms, so it's important to compare a blue-chip stock's valuation to its peers within the same industry. Analyzing financial statements is crucial for understanding the financial health, performance, and stability of a company. Here's the importance of analyzing the key financial statements. Income statement. The income statement, also known as the profit and loss statement, provides a summary of a company's revenues, expenses, and net income over a specific period. Analyzing the income statement helps in the following ways. Revenue growth. Assess the company's ability to generate consistent revenue growth over time, indicating market demand and business strength. Profitability. Evaluate the company's gross profit margin, operating profit margin, and net profit margin to understand its profitability and efficiency in cost management. Earnings trends. Track the company's earnings performance over multiple periods to identify any trends, such as increasing or declining earnings. Balance sheet. The balance sheet provides a snapshot of a company's financial position at a specific point in time, showing its assets, liabilities, and shareholders' equity. Analyzing the balance sheet is important for financial stability. Assess the company's liquidity, solvency, and overall financial stability by analyzing its current assets, long-term assets, current liabilities, and long-term liabilities. Asset quality. Evaluate the composition and quality of the company's assets, such as cash, accounts receivable, inventory, and property, plant, and equipment. PPE. Debt analysis. Examine the company's debt levels, including short-term and long-term debt, and assess its ability to meet debt obligations. Cash flow statement. The cash flow statement provides information about a company's cash inflows and outflows from operating activities, investing activities, and financing activities. Analyzing the cash flow statement helps in the following ways. Cash generation. Evaluate the company's ability to generate positive cash flow from its core operations, which is crucial for sustaining its business activities. Cash flow trends. analyze the trend of cash flow over multiple periods to identify any changes in the company's ability to generate and manage cash. Capital expenditures. Assess the company's investment in capital expenditures to understand its growth plans and the extent of ongoing investments in its business. By analyzing these financial statements, investors can gain insights into a company's profitability, financial stability, growth potential, and ability to generate cash. It allows for a comprehensive understanding of the company's financial performance and aids in making informed investment decisions. Additionally, comparing financial statements across different periods and benchmarking them against industry peers provides a broader context for evaluating a company's financial health and performance. Explore key ratios and indicators used in evaluating blue-chip stocks, such as return on equity, ROE, debt-to-equity ratio, and earnings per share, EPS, growth.